All right, welcome everyone. My name is Coach David. It is August 21st at 6 o'clock. Today, we're going to be talking about how to save in the right way, right? How to make sure you save money on college, right? We are here with Financial Aid Secrets, right? For those that haven't done it already, please go ahead and put your kind of student's grade level in the chat. We will make sure to kind of point out different things that are important for seniors, juniors, sophomores, freshmen as we go through the presentation here. Okay. But without further ado, let's kind of get straight into it here. Okay. So for today, we're going to do a quick welcome. We have a lot of people joining our Facebook group. We have a lot of new families in our coaching program. If you guys didn't know, I'm also the head coach in our coaching program as well, part of College Admission Secrets. Okay. We'll also talk a little about who we are, right? We will also be talking about financial aid today, right? How to save better, how to prepare for college expenses, and what are those college expenses. And I will also be talking a little bit how like statistics try to trick you. And then also what can you do to change your situation? And finally, what we can do to help. Okay. So first off, who we are, right? So we are here every single week, right? 6 p.m. Pacific time, right? On Wednesdays. That has been our bread and butter time. Now, obviously that might change. So parents out there and students out there, if you feel like you would like to have us at a different time, please let us know either in the Facebook chat, in Discord, in by email, whatever way you can get a hold of us, be like, hey, I want to attend live, but I haven't been able to. Is there a different time? And then maybe if you suggest some times and we get enough suggestions, we might change the time, right? But what we do every week is we bring common issues to the forefront so that parents can understand exactly what's going on with everything. Right now, whether you're one of our coaching families or you're in Financial Aid Secrets or you're one of our Facebook families, right? We want you to stay connected with us, engage with us, ask us questions because we are here to give you the answers. So as much as we can, right? We want to help, but people in the Facebook in our coaching group, right? You need to make sure to reach out to us and ask those important questions that you have, right? There are no bad questions here. Everyone is here to learn. So that's what we're trying to do. Okay. Now, over the past 15 years, I've been able to help thousands of families make sure that their students can go to college without this looming cloud of debt over them. Okay. We've been able to save families millions. Okay. And hopefully, right, I can do that same thing for your family. Okay. Now, let's talk a little bit about financial aid news. Okay. So I showed this last week, right? And so I've been getting a lot of questions about it. And so I just want to reiterate it one more time, right? So everyone knows that last year was complete chaos, right? This year, it's the same thing, right? There is another delay, right? They told us that it's going to open October 1st, right? Now it's December 1st, right? So and there's new articles coming out every single day. Now what they say is that they're going to have a soft opening or soft launch on October 1st, right? But who knows what happens, right? So our kind of suggestion to families is that you do not turn in things at that point. You wait until it is fully out after they've worked out the kinks. Because what if you turn it in on October 1st? There's something wrong with your account. It gets stuck in limbo. You're never able to turn in your FAFSA for your senior or your first year in college or second year or third year. And then you're kind of in this kind of bad situation. Okay. So it's something that we want to make sure that doesn't happen to our families. Okay. Now, last year, I don't know if you guys know this or not, but the head of the Federal Student Aid Office stepped down last year, right? Because, well, I mean, he probably couldn't handle the heat that he was getting, right? But realistically, there was problems to be solved. They needed to be solved, and they didn't get solved for months on end, right? Now, I kind of put this joke in, but I wonder who's going to get fired this year. But I'm pretty sure that someone will get fired this year, right? Someone high up in this federal student aid office. Okay. So stay tuned for more developments. Okay. Now let's start off with financial aid and how to save money. Okay. Now, how to save money? Well, you put it in a savings account, right? But for the purposes of financial aid, it's a little bit different how you need to save money in order that it does not detrimentally affect your financial aid. Okay, so let's talk a little bit about kind of how to save, right? So there's a couple key pieces that I want to make sure that you guys understand, right? So the first thing is assets or cash in a parent's name versus assets and cash in a student's name. Okay, now we have a lot of people here, right? And it's great to see all these new faces and new names that I have, right? I see some that I see every week. I see some that I haven't seen in a while, right? But for those that know, you guys can stay a little bit quiet. But for those that are kind of new here, or it's, your first couple times here, I do want to ask this question and get a little bit of interaction from the students, or not the students, the people here today in the audience. Okay, so I'm going to ask for a little bit of interaction here. My question is, right, let's say that it is a parent's asset or cash and a student's asset or cash. So you can just kind of put two numbers in, right? So let's first start with a parent's asset or cash. When financial aid offices look at a parent, and let's say that they have $100 in assets or cash, what percentage of that kind of $100 do you think that the school looks at and says, oh, we can grab that, we can take that from the parent because it makes sense? Okay, so let's go ahead and have people kind of put some numbers into the chat. Okay, so I have someone that says 25%. Okay, I have another person that says 10%. I have another parent that said they're going to take all of it. Okay, I have another 10%, right? Let me tell you what the answer is. The answer is actually 5.4%. That's what they're going to take. So for every like $100 in asset and cash you have, it's 5.4%. Okay. Now, how about if it's in the student's name, right? An asset or cash in the student's name. What percent do you think that they'll take from the student, right? All right. We have 25%, right? In the Q&A, I have someone that said 0%, right? 1%, right? 2.5%. I have someone that says 50%. Okay. So the answer here is when it is a student asset or cash, the school can reach out and grab 20% of it. Okay. So when we're thinking about how to save, right? Now, I know that a lot of families, they want to prepare their students, for the future. You never know what's going to happen. They create trust funds. They do this. They have all these like complex financial vehicles to like help save for their students. But instead, right, if it's in your student's name, they're going to be able to grab 20% of it. Now, 20% of $100 doesn't seem like a lot. It's a $20 bill, right? But what if that $100 is $100,000 or $500,000 or $1 million? Then it becomes very different. Okay. So the one thing about how to save is this: you should not have as many things in the student's name as in the parent's name. So if you're going to buy an asset and you're like, oh, I want to prepare my kid and give him a house, right? Don't buy it in the student's name. That's not going to help out in this situation. Okay. Keep it in the parent's name, right? Another way to save is use a vehicle that will get you to the number that you want to be at. Okay. Now, what I kind of have talked about generally about the 529s is this, right? So use a financial vehicle that will get you to the number that you want to be at, right? For some families, it's kind of like, well, you know what? There are families that make too much, right? But it still stings when you have to pay $100,000 private school bill, right? And so there are families that prepare in different ways by, putting money into the market or this or that. Now, the 529s, generally speaking, they need to be there for a long time. I'd probably say like 20 years, right? In order for your money to grow in a way that is significant so that you can pay for college all in cash, right? But there are other kind of investment tools, right? There's other kind of types of accounts that can get you to that number faster, right? Even though it might be a little bit more aggressive or a little bit more risky, right? So make sure you choose the correct vehicle, right? Oh, I'm not sure what happened here, but I'll kind of like, talk this through. The other parts are like what not to do. Okay. So again, we already talked about, hey, don't put stuff in the student's name, right? Even trust funds or this or that, they are very dangerous because if the student can reach out and grab those funds, then they consider it a student asset at the point of financial aid. Okay. Another thing, right? Don't use the 529 if you have 2 to 5 years left. It doesn't have enough time to grow. Okay. So those are a couple things of what not to do. Okay. I'm not sure what happened to all the text here, right? And so sorry about that, but again, I can talk through it. Now I have this other ways to leverage your situation. I have this really great, nice picture of these cartoon grandparents here. Now, one of the things that I have been talking about like over and over the last 2 years is that grandparent held 529s are no longer considered in financial aid calculations. Okay, so if you are in kind of like, a good, if you have a good relationship with the grandparents and, they want to help out and make sure that, the student is able to go off to college without a lot of debt, right? You might want to change the custodian of your 529 to the grandparents instead. Okay. Now, what is the process of going to that? Well, you need to go and talk to, your financial person to say, hey, I want to switch this over. But you also need to try to understand the tax implications of moving a 529 from you to your kind of like to the grandparents, especially if the grandparents are no longer working. Okay, so there are tax implications. You should talk to your certified CPA, right? Or a tax person to make sure you understand what's going to happen with that, right? But this is one way that you can leverage your situation, right? You've changed the custodian. Now that, let's say that you had like, $125,000, $150,000, $200,000 in your 529, that is no longer that 529 is no longer considered in your financial aid calculation. So it looks like to the colleges that you no longer have that money available for college. Okay. Now, a lot of people might say, hey, isn't that kind of like a trick? No, the kind of federal student aid commission actually told us that they were going to do this. They are the ones that created this loophole, right? So for those that are thinking, oh my God, Coach David is trying to, get us to do something wrong. No, this is exactly what they intended for it to happen. Okay. So just keep that in mind. Okay. Now, one of the things that I did want to talk about a little bit is making sure that everyone understands college expenses and the ways that colleges try to dupe you into thinking that their college is going to be affordable. Okay. Now, I know I was talking about all these good things about like how to save money, how to, how to have, financial aid reach less into your pocket, right? But this is one of the ways that they trick people into coming to their colleges or applying to their colleges. And then, maybe the family cannot, afford the tuition, and then students are heartbroken. So I want to help families understand exactly what's going on here. Okay, so the first thing I'm going to say is this, right? Colleges are trying to confuse you, right? Every college around the world touts that they have a strong financial aid package, but you need to understand exactly what that means, right? So I'm going to try to show you exactly what colleges cost, right? And how they trick you with the statistics that they give. Okay, so first, because I am based in California, we're going to start in California, right? So the average cost of a California public school, and we have, UC Berkeley here, iconic picture of, the clock tower, right? It is an average of $30,000 to $40,000 a year, plus or minus, right? Depending on your students' spending habits. Their statistics say that 81% of full-time students receive financial aid, and that the amount of aid that each student gets, the average of that is $8,640. When you see these statistics, you might be thinking, that's pretty great. They're almost taking 10 grand off. That's like at a CSU, that's like a 30% haircut. At a UC, that's a 25% haircut. That's really great. I want to apply there. But this is what ends up happening, right? In that statistic, right? What is included, right? In that statistic of 81% of full-time students receive aid, it includes free money that the school is giving out, and it also includes loans, okay? Now, I will kind of explain it a little bit later, but keep that in mind. That $8,640 of aid given by the school, that includes free money and loans, okay? Now, let's talk about private schools, okay? The average cost of a private school is anywhere between $80,000 and $90,000 a year. At these private schools, it says 88% of full-time students receive financial aid. The average amount of aid is $24,440. That's huge, right? Just even at the $90,000 mark, that's almost 30%, right? No, I did that math wrong. No, you're right. That's about 30%, right? Roughly speaking, right? 28%, somewhere around there, right? But again, remember, this includes free money and loans. And let me tell you why this is kind of like such a trick that they use, right? At out-of-state public schools, right, the average cost of attendance is $60,000 to $70,000 a year. 36% of out-of-state students receive financial aid. The average amount of aid at public universities for out-of-state students, they don't even produce that data, right? But what does this kind of like aid include, like this full-time students receiving this aid? It includes free money and loans. Now, here's why that is a problem, okay? So you need to make sure that you are not misled by these statistics, right? If a college costs $80,000 a year and the school offers you $80,000 in loans, you are part of this statistic, right? Now, you got no free money, right? They gave you $80,000 in loans that you eventually need to pay back in one way, shape, or form, right? And for them, for the colleges, they have said, we have met your need 100%, right? They fulfilled everything that they needed to, even when they're not giving you free money. So you need to make sure that you understand that when you're looking at colleges, the average amount of aid given to each student, whether it's 10,000 or 20,000 or 30,000, you need to make sure that you understand how much free money they're giving out, not just the total amount in loans and free money that you're getting. Okay. Remember, you have to make sure that you understand that loans are part of financial aid packages. Even though you need to pay them back, they still consider them financial aid, right? But in our program, I don't really care about loans, right? Now, I've explained them a couple times because I want parents to understand exactly how much a student can take, how much a parent can take, right? What the interest rates are and things like that. But we focus here on the free money, right? Now, the government tells us that 85% of students across the country receive financial aid. But the real question that I have as someone that has been doing financial aid for the last 15 years is, what kind, right? If you're giving a $100,000 loan every year to every single student, does that really benefit any of our families, right? The answer is no, right? We need free money and we want it now, okay? Now, before we go a little bit further, quick word from our sponsors, okay? Now, we did have college application intensive for a long time. We don't have that anymore. We are completely sold out, but we do have college essay service for the class of 2025, right? So if your student doesn't really have a direction in how they're writing their essays, or let me put it this way, if your student has not started their essays, we are in a big, big, big pickle right now, right? So if this is your student, they have not started their essays, they have not even created accounts for their applications, right? You need to talk to us as soon as possible, right? So text essay to 415-938-8721 to get more information about our college essay service. For those that are trying to type this number to their phone, just take a quick screenshot. It'll be there. And then I will also have it at the end of our presentation. Okay. So back to our training. So a lot of the questions that I have been getting recently is like, how do I lower my kind of like expected family contribution by student aid index? Okay. So for me, realistically, the expected family contribution was a much better like acronym because student aid index doesn't mean anything to anyone, right? So student aid index is the exact same thing as expected family contribution, but expected family contribution actually tells us more than SAI. I'm not sure why they changed it, right? But let's talk about the different ways that you can do that, okay? So these are the ways that I found to effectively lower your student aid index, right? So one of the ways is shift funds to minimize cash, okay? So there, again, if you are in a good relationship with the grandparents, right, contribute money to a 529 owned by the grandparents. You can also pay off debts, right? Or you can use funds for equity building purposes, right? Some people, it's like, you know what, we have to sell our house in, 3-4 years. We need to redo the backyard. We need to redo the kitchen. It is ways to get cash off the books, right? Another way is to lower assets in the students' names, okay? So you can take the money that is in an UTMA or a UGMA, right? I like these like really weird kind of acronyms, but these are kind of like the kind of trusts and kind of gifts to minors kind of accounts that you have, and you can move it to a Roth, right? Roth IRA or to a 529 owned by the grandparents, okay? Now you guys might be seeing a theme here, right? So grandparents are great, right? So if we can get the grandparents involved, and part of the process, this is going to be a little bit easier for your family, right? And again, like I said, there's a common theme here, right? If you can, you might also want to move assets, right, that the student has to another person, possibly a grandparent, okay? So keep that in mind. There's a couple more things here, right? Now, this one's not always possible, but I thought I'd put it on here because there are some people that have reached out that have these kind of life events coming up in their life, right? So reducing income is the #1 way to lower your SAI, right? Your student aid index, right? Now, I've had people reach out and be like, you know what? I'm on the cusp of retiring. I could retire a year earlier. Does that make sense? And then I'll let you guys know, right? Now, there also might be business owners, right? And you can defer your income until the next year. That's a possibility, right? There's also the possibility of people to use kind of like, and again, if this is possible, use things like the Family Medical Leave Act to take care of a family member, like a sick family member, right? Again, that will lower your income as well because you can take that leave and then not get paid, right? Knowing that hopefully, right? And I say hopefully because like, again, you don't know how your company reacts to that, right? So that's another way to kind of effectively lower your SAI, right? Now, another one is lifestyle changes. Okay. So again, these are larger life events also that are kind of that might kind of change your financial aid situation, right? So let's say that you're getting married for the first time, right? Or you're remarrying, right? It might make sense to wait right now if both of you have an income. Okay. Now, why do I say that? Well, because technically speaking, when you get remarried, your taxes show both kind of people's incomes unless you continue to file like separately, right? But if you are married, one of the kind of benefits of being married is that you get a larger deduction, right? So the question is like, what makes more sense for your family? But you need to walk through that process and understand that process, right? Also, there might be parents that are separating currently, right? So if you're separating, you need to make sure that you have a plan to understand how that will affect the student's financial aid, right? Again, starting this year, it's more about kind of like who makes more money, right? But there are different things that you can do in between to make sure that one parent is used instead of the other, right? And then finally, this is more for students, but you can see if you qualify for independent status, right? Now, I've talked about this a lot too, right? But there's only like really 4 ways that you can be considered independent, okay? One is that you're over the age of 24 in the academic year that you're starting, right? You're going to turn 24, right? The second is if you're married. The third is if you have, if you're an emancipated minor, right? And the fourth is if you have, the fourth is if, oh God, I just lost that. The fourth is if you have already completed your bachelor's degree and you're moving on to further studies, right? Now, there's one that I didn't necessarily think about, right? But I will bring it up, right? If your child has a child, right, then you are also considered independent. If your child has a dependent, then they are also considered independent as well. Okay. All right. So with this, I'm going to kind of talk about how we can help, right? Now, as you prepare for this process, I always call this a battle, right? It's a war, right? So you need to prepare, right? So in order to prepare, you need to kind of make sure that you are prepared, understanding how much things cost, right? How much money you might need. You also need to learn to save in the right way, like we just talked about today, right? You also need to make sure that you learn some strategies to maximize financial aid, right? But most of all, right, whether you sign up with us or not, you do need to talk to someone that can help you navigate this minefield of financial aid. So what we ask of you is nothing big. Sign up for a 15-minute consultation with us. If we can help you, we will help you. If we can't, I will send you on your way with some tips and tricks of how possibly you can kind of get more qualified. But there are definitely families that I have turned away, right? I think I see a couple of them here today, right? And I was like, you know what? I can't help you. Or you know what? I said, for other families, I'm like, you know what? Whether I do it or you do it, we're gonna get the same amount. So you go ahead and do it, right? So like I don't want to take that sort of money. Okay. So nothing to worry about there. Okay. So just a little bit about the success stories, right? Again, these are the ones I show, right? Once I have new ones, I will show those new ones, right? But for USC, right, the family made $280,000 a year. I got them $60,000 a year, right? For Carnegie Mellon, $350,000 a year was the income, right? I got them $50,000 a year at Carnegie Mellon. Okay. Now, again, we're going to jump into Q&A, but I do want to make sure that I say this one more time. If you are interested in the college essay service, please text essay to 415-938-8721, right? That's essay to 415-938-8721. Okay. And I do want to make sure that we jump over into kind of our Q&A, and I do see some questions already. So go ahead and make sure to do that. I'm going to go ahead and put the link for our consultation in if I can find it. Here we go. In the chat here. All right, Kelly, thank you for the shout out there. Right. Again, if you guys do have questions, we're there to answer. Right. So the link is there. Please sign up. Again, especially for seniors. If you're a senior right now and you haven't talked to anyone about financial aid, you need to talk to me in the next week or so. Right. So please reach out to me. If you can't find a time, I'll try to find a time for you. But in the next week or two, we should talk, discuss the situation. Again, if I can help, great. If I can't, you're on your way knowing like what you need to do. Okay, so we have some questions here. I'll take them in time order. So we'll go ahead and do that. Okay, so we have a question in the Q&A, and it says, we have a significant amount of home equity, but I am not in a position to take it out. Does home equity factor into financial aid? So this question is a question that I get asked a lot, right? And during our consultation, there's a couple things I ask you. So just to kind of give people like a heads up as you're signing up for your consultation, I ask you about kind of the family's like AGI and if you're a senior right now, I'm going to ask for 2023. If you're a class of 2026, I'm eventually going to ask you about the kind of 2024 tax year. But right now, I'll probably go off your 2023 tax returns, right? But it depends on the types of schools that you are applying to, right? I also, sorry, let me start over, right? During the consultation, I will ask you about your gross income. I'll also ask about assets, including retirement, right? A lot of parents are really shocked to know that retirement is part of the calculation, right? And then this parent actually just asked about home equity, right? Now, home equity, retirement, for the purposes of certain schools, and I'll just give you an example, like the UCs, they do not take that into account, right? So you don't have to worry about it. But when you're going to a private school or a school that uses the CSS profile, your home equity and your CSS and your kind of like retirement, your investment accounts, those things will come into play. Okay, so it depends on where you're applying, whether your home equity would factor into financial aid or not. Okay. All right. We have another question here, and it says, is the consultation included in the program, or do we have to pay to register? So I have never had anyone pay for a consultation, right? Our consultations are free, right? So feel free to sign up for one, right? All I ask is that you guys show up, right? If you can't show up, just let me know or cancel it. That is all that I ask, right? It's a little weird, it's like sitting in front of a Zoom screen when no one's there, and I'm just kind of sitting there all sad, right? So just make sure to sign up for it, show up for it, and then we should be able to help you in one of two ways. Again, like I said, either giving you the advice that you need or making sure that we tell you about our program that can help you. Okay. All right. Any other questions? Right. Usually, like I get a lot of questions when I say last call. So I will say last call, right? Last call for questions, right? If we don't have any questions, we'll kind of end up here. We have questions here. It says, I've heard that Vanderbilt is stingy, and so is Boston College, as well as USC for California residents. Do colleges that are public for out-of-state applicants consider cost of living adjustment, for instance, Michigan? No, they don't. They don't care, right? So, for instance, if you're a California resident and you're going to University of Michigan, it's going to be $70,000 a year. If you're going to University of Washington, it's going to be $70,000 a year. It doesn't matter if you are, making, $50,000, $100,000, $500,000, or $1 million. Right? Or actually, you know what? They might give you something for $1 million because they might ask for a donation, right? But generally speaking, if you go to an out-of-state public university, you will not get anything. Okay, you have to think that it's going to be full price, which is 300% of the in-state tuition plus your living expenses. Okay. As far as like USC being stingy, yes, I've talked about it all the time, right? Vanderbilt, yeah, a little bit stingy, right? Boston College, I haven't really seen Boston College be that stingy. I've actually had a lot of students go and get some significant money there, right? But for sure, Vanderbilt to a certain extent, and then USC for sure, right? USC, the rising cost of living in California is affecting USC too, so they need more money, so they can't give out any, right? Even though they have probably a couple $1 billion in the bank. Okay. All right. We have a question here, and it says, is ninth grade too early to have a consultation with you? And my answer to that is no, right? The reason is because the tax year, if your student is in ninth grade right now, that means they're a class of 2028, right? So that means that 2026 is the tax year that we need to kind of make sure that we focus on and do the things that we can. It's not that early right now. The other reason why I'll tell you to sign up as early as possible is because our program increases in price probably every, I'd say, 10 months. Okay, so if you sign up now, you're probably going to save a bunch of money on just the service fees for our program versus if you sign up when you're a senior. Okay. All right. We have another question here, and it says, what about the CSU system requirements? The CSU system requirements are also, based on kind of the FAFSA. So they won't take your retirement, your kind of like investment accounts or your home equity into account. I think that is what you're asking. All right, we have another question here, and it is, my kid is very interested in University of Utah. Is there any way to determine which majors give more merit? Any general tips for presidential award? My kid is undecided, so wondering if there are certain financial advantages for certain majors. So that's a very school-specific thing, so I don't have that off the top of my head. But generally speaking, right? Generally speaking, I'm guessing that you're in California, right? But if your student is headed off to University of Utah, you have to think that it's going to be full price, right? Now, merit aid is something that does exist, but it's kind of like a unicorn, right? And let me give you a reason why, okay? So at the kind of like, I'm just going to use the UCs as an example because I'm here in California, right? And University of Utah is also a state school, right? So there is something very similar at, the UCs, and it's called the Regents Scholarship or the Chancellor Scholarship, okay? Now, with that Regents and Chancellor Scholarship, let me tell you what the probability of you getting one of those is, right? Now, every year at any given UC, there's over like 100 and let's just say 50,000 students applying. So first, you have to compete with those 150,000 people to get in, right? And out of those 150,000, they choose 10,000 students to send acceptance letters to, right? Out of those 10,000 students that are accepted, any given year, the UCs, each individual one of them, sends out 50 letters to students saying that they got a Regent Scholarship or a Chancellor Scholarship. So your chances, realistically, if you think about it on a more specific scale, it's 50 out of 10,000. But getting in is also a problem as well. So the chances of getting, a merit scholarship is 50 out of 150,000, right? So keep that in mind, right? And Kelly brought up a great point, right? So there is the Western Undergraduate Exchange. So if the University of Utah is part of that, right, and the major that you are choosing is not restricted at the University of Utah, you can get the Western Undergraduate Exchange tuition discount. What that is I just told you before that the out-of-state tuition is 300%. So let's just use $100, right? So let's say that the in-state tuition for a certain state is $100 a year, right? Now, if you're coming from out of state, like let's say we're going from California to Utah, normally it would be $300. But with the Western Undergraduate Exchange discount, right, instead it ends up being $150. Okay. Okay, so I think that answers the next question, right? Actually, that answers the next two questions. So we're good there, right? So it's really great. Obviously, there's a lot of parents doing a lot of research, right? The one thing I will say is that take everything with a grain of salt, right? Because there's a lot of information out there that is not necessarily incorrect, but it's a little bit kind of skewed in the way that they want to present it. Okay. Now, if you ever have any questions about things that you guys see on the interwebs, right, please reach out to me and I can kind of set that straight, right? I'm not going to purport to know 100%, but I've been in so many situations with different families and different situations that I've been through. I'd probably say 98% of situations that are out there in the world. Okay. All right. So I don't see any additional questions, right? Again, one more time, I'm going to put the link in the chat here, right? Please make sure to sign up for it. Once I close down the Zoom, this link will disappear. So either click on it now or copy and paste it somewhere so that you have it so that you can reach out to us. Okay. All right. Sounds great. So, I look forward to seeing you guys next week. Hopefully I have less bad news next week about kind of like the FAFSA situation, but I highly doubt that it will be any better. Okay. And again, just one last thing. I just want to encourage everyone to reach out to us, talk to us, figure out what you need and how we can help. And then, sign up for a consultation. Okay. All right. So with that, I will kind of let everyone go. I will see you here next week at 6 o'clock. And if there are any things that you guys wish that you guys kind of learned more about, please reach out to us and let us know so that I can kind of add it into the repertoire of what we're talking about in Financial Aid Secrets. Okay. All right. Everyone have a great night and I'll talk to you again soon. Bye-bye.